Welcome to the CompTIA Tech Jobs Report for February 2024. Let's jump right in. The recent release of the BLS Jobs Report showed employment across the U.S. economy increased by a larger than expected 353,000 new positions. The national unemployment rate held steady at 3.7%. For the tech perspective, let's turn to CompTIA's Chief Research Officer, Tim Herbert. Hi, Tim.
Hi, Andrea.
So, Tim, tell us, what should we know about this latest report?
Overall, a pretty good start to the year. And as a reminder, the February release covers data for January. So this is really the first look at 2024 labor market data. And if you look at the four key metrics that CompTIA tracks in the Tech Jobs Report, you see that 3 are in the positive and 1 is down. So that's a scoreboard that we will take any day. Starting with tech sector employment, and this is all of the employees working for tech companies, both on the technical and the non-technical side. We had a gain of approximately 18,000 net new positions. And this is on the heels of 20,000 positions last month. So 2 back-to-back strong months is a very promising sign. And we've seen a continuation of the pattern, employment growth led by tech services, cloud infrastructure, software development, and also semiconductors. So a nice broad mix of hiring there. For tech occupations across the entire economy, we did see a dip. And this is a little bit of a mystery. The tech unemployment rate continues to hold steady, and it's still in a very, very low range. 2.3% for this month, and hovering right around that 2.1%. So much lower than the national rate. And typically, we do see when the unemployment rate is low, it's moving in conjunction with the tech occupation measure. So there could be some lag effects, meaning that recent hiring may not be showing up in the figures yet. But it is a little bit unusual. And as we have acknowledged previously, there does tend to be more volatility with the measure of occupations across the entire economy. So something we'll be watching closely. And then lastly, the tech job posting figure. And this is employer hiring intent. So you can think of this as companies, they are actively recruiting. They may have an advertisement on a jobs board or their own website. We had a rate of roughly 172,000 new postings for the month. And that's in addition to the roughly 200,000 active postings. So think of these as postings made previously that carried over. The company, maybe they're still reviewing candidates. And the net gain month over month is an increase of 36,000. And this is the highest rate that we have seen in about a year. So as we've covered previously, we did have record level settings of job postings during much of 2022. And then as expected, we did see a pullback during 2023. So the numbers have settled into a more long-term, expected pattern. But it is notable to see such a significant jump to start the year. So that I would say that is definitely a good sign of hiring to come.
That's a great thing. Are there any other insights that you can share to help make sense of some of the apparent disconnects in the market?
Yeah, disconnects is probably definitely the best way to characterize that. If you have been following any of the headlines from some of the major news outlets, there have been quite a few stories over the past couple of weeks discussing what is going on in the market. We had stronger than expected economic growth last quarter. We have low unemployment, a strong jobs report, the stock market is booming, so a lot of positive signs. But then we've also had a few notable major tech companies announce layoffs. So it is difficult to sometimes reconcile what is happening in the market. And obviously, we don't know all of the reasons behind why companies may announce layoffs. But some of the factors that we should always keep in mind, it's not uncommon for companies to simultaneously hire and then also shed workers, especially in technology. I mean, this pretty much defines the history of technology, in that companies are allocating resources to their growth areas, to new innovation, and then oftentimes they're scaling back in some of the lower growth, or in some cases, these could be obsolete product lines. So some of this is clearly going on right now. We also see that in some cases, companies, when they announce layoffs, it could be support staff, it could be marketing, it could be sales, it could be any of the other business functions. In some cases, these large multinationals, it could even be workers that are based outside of the US. So there's always a lot of nuance in the data that we have to be a little bit careful with, that we don't read too much into it. And then the last number I do want to share, if you notice in the accompanying chart, the unemployment rate, that is a signal of the number of workers that are looking for positions. And if we did have the true mass layoffs that sometimes it's implied in stories, we would have seen that number shoot up. And that simply is not the case. We continue to see a quite low tech unemployment rate, which means that workers that have been displaced, and of course, we always want to be sensitive. It is incredibly difficult to lose your job. But for the most part, many of them are finding new employment opportunities. And in some cases, it does mean, though, resetting expectations. It may mean shifting to another sector. It may mean shifting to, say, a smaller or mid-sized employer. The reality is there may not be the same opportunity to work for, say, a VC-backed startup in Silicon Valley. But the tech workforce is so expansive. There are job opportunities everywhere. And that's a good segue into the next chart. Oftentimes, we do see these scenarios where companies that may be laying off or reducing their headcount in one area, it's offset by hiring elsewhere. And this could be hiring in other sectors. It could be hiring by mid or small companies. And this is confirmed in the most recent job posting data. And if you look at the mix of sectors, from professional services down to manufacturing, to financial and retail, and the list goes on and on. We could go down to a large number of subsectors, but I think this gives you a flavor for the story, in that there are a lot of different types of companies hiring, and we have just a few examples here. These are all big household names, from the Deloittes and Booz Allen's to Ford, Honeywell, Walmart, Best Buy. I think it's illustrative of just how pervasive the need is for technology, that all of these companies have a requirement to transform a lot of their operations. They obviously have a need for data, for integration, for cybersecurity, for software development. And from a job seeker's perspective, this is something to always keep in mind. Working in tech doesn't necessarily mean working for a large technology company. There are a wide range of opportunities, from large companies to mid-sized companies to small companies.
And you mentioned job seekers. And speaking of job seekers, CompTIA just released its job seeker trends research. What does this tell us about how job seekers are feeling about the employment opportunities out there?
Yeah, CompTIA's job seeker trends research, it's a tracking study that we've been running now for quite a few years. And it's designed to provide another layer of insight. So the labor market data from the Bureau of Labor Statistics and Lightcast and other sources, it tells us directionally where the market's going. But it doesn't always help us understand, like, what are some of the factors that job seekers are considering or employers are considering. So this research, we publish it every January and every June, so every 6 months. It really helps to dig into some of those questions around, like, what is going on and why is that occurring? And the research does confirm that it's still a very healthy, roughly 27% of the workforce are what we would consider to be active job seekers, meaning that they explored a new job opportunity within the past 3 months. And then there is another segment of what we would consider to be the passive job seekers. So they're not necessarily actively looking, but they are, say, open to opportunity. That 27% translates to about 44 million individuals. So 27% may not sound like a lot, but that is a massive number of potential workers that are exploring opportunity. They may be looking for advancement. They may be looking for a career change. And we do find in the research that there are typically two approaches. There are those that it could be a specific factor that prompted their job seeking. So, for example, their financial situation may have changed. Perhaps they moved. Perhaps they had a family situation change. And that really jump-started their job seeking. And then for the other group, which accounts for roughly 60%, so the slightly larger, it's a culmination of factors. So it's not one thing or another, but over time, perhaps they feel stuck in a rut. Perhaps their career is not progressing the way they had expected. So you can imagine there's a lot of workers in that situation where their career may have plateaued, and they begin to explore new opportunities. So there's a lot of detail, and I think for today, we're just going to touch on some of the highlights. But you can imagine what happens next. Many of these workers, they begin to think about additional training, additional certification. In some cases, they may begin to work with a career coach. But all of these steps that help to accelerate job seeking and to ensure that job candidates put themselves in the best position for success. The counterpoint that we have to be aware of is what CompTIA refers to as the confidence gap. And these are the real or perceived barriers that may inhibit someone from considering a career in technology. And it's a significant problem. This is something that we have been tracking for many, many years now. And according to the latest reading, roughly 59% of job seekers acknowledge that the confidence gap may pose some deterrent to considering technology. So this is an issue both because it limits opportunity and perhaps it deters someone who may be a great fit to work in technology. But it's also a major problem for employers because it narrows the pipeline. And even with a slightly less hiring environment, slightly less frenzied hiring environment today, there still is a broad demand for tech talent, for tech skills across the economy. So we have to remain focused on both expanding and diversifying the tech pipeline. And one of the ways to do so is to overcome the confidence gap. So this is something that CompTIA is very passionate about. We work closely with job seekers to help them understand that it's never too late. Some may feel that they're starting too late, that perhaps they are deficient in some area of skills. Perhaps they don't have a 4-year degree, or in some cases, they even believe that they have to have a degree in computer science. So we really work to try to dispel those myths, to provide the support necessary through training and certification. And then also with employers. And in some cases, employers, they're over-speccing, and they may be doing this intentionally or unintentionally, meaning that they could be hiring at a much higher level than is warranted for the position, especially entry-level tech jobs. It is simply unnecessary to have some of the very high-level degrees or credentials or even work experience realistic for the position. So again, this is something that we could spend a lot of time talking about, and I'm sure we will address in a future episode. But I would encourage everyone to take a look at the latest Job Seeker Trends report for more detail.
Thank you, Tim, for sharing this insight. Really appreciate your time.
Great. Thanks, Andrea.
And viewers, thank you for tuning in. We will see you back here for another CompTIA Tech Jobs Report next month.